words of wisdom because, listen, it's a lot. It's a lot. I have been to a lot of technical analysis conferences and financial conferences, and this isn't one of those where, it's a bunch of fluff and sponsors taking up everybody's time and all. This isn't that at all. This is value after value after value. Spencer Israel, this is your first Chart Summit. You are blown away by the speakers presenting. You couldn't believe it. You underestimated.
I was just surprised because I'm the one that does the majority of the reach outs for the morning show, and my hit rate on that is like pretty good. But the hit rate on the Chart Summit was like 98%. So I was just like surprised at how quickly everyone was like, yeah, sure, whatever, I'll do it.
This is Chart Summit, Spencer. This is the #1 virtual financial conference in the history of humankind, since going all the way back to the dinosaurs and whatnot. This is the best ever, is it not?
Yeah. All right. Okay. Enough about that. ChartSummit.com. Sign up now. We're going live in about a little over 3 hours. Let's do charts, though. If you have any questions on a ticker, you can drop it in the chat. You can also email us questions@stockmarketmedia.com. We've got a few emails already. Let's take a look at those. Let's start with this question about PayPal, specifically the weekly chart. How would you view the weekly chart in PayPal and the RSI? And then they asked, is it still a crypto proxy? Probably not, but based on the chart, I don't know. Let's take a look-see.
I mean, this remains the level, the 66. I remember we bought for a little bit of a squeeze. That trade actually worked out okay for a few days, a few weeks really. But, as long as we're below 66, there's really nothing to talk about. And it's less about a crypto proxy as it is more about, and then you wanted to look at the RSI also.
Yeah. Forgot who asked this. Sorry, I didn't write it down.
Right. So here we're looking at the PayPal. And then here's your 14-week RSI. You can argue that you've got, some kind of, bullish divergence potentially setting up here, right? Lower lows in price, higher lows so far in PayPal. Yeah, maybe. But again, I got to see it above 66. Now, in the near term, very short term, as a retest of those August lows, if you're looking at a daily chart, fine. In a short-term basis, if we start to squeeze above 59.5, 60, I think you could really get that squeeze. So like if you want to buy it against 60, I don't hate that. You could buy it against yesterday's lows also if you really want to be aggressive. And what I mean by that, trading against it, I'm talking about like, using as a stop. Like if it breaks yesterday's lows, like all bets are off. Like I would definitely not own it below yesterday's lows. But if you want to take a shot, do some bottom fishing against yesterday's lows, understand it's a low probability of success outcome, but a very high, very favorable risk versus reward. So that's sort of, there's no free lunch in America. So for the very favorable risk versus reward opportunity, you're getting a lower probability of success outcome. That's the market for you. That's what PayPal has now. I think above 66, maybe it gets going some more. Maybe start adding to positions, perhaps, right? Depends on your time frame.
Okay. All right. Let's move on here. Look at a few others. Here's a question on Booking Holdings. Ivan is looking to get long. BKNG is looking for a level to lean on here. Maybe a level to get long. BKNG.
This is the old Priceline, Spencer. I don't know if you recall.
Yes, I do recall, actually. They still own Priceline. It's the same thing. They just changed their name.
Used to be PCLN. Sorry, guys. I'm trying to get this scaling right. PCLN, big day trading stock.
They own Priceline, they own Booking, and they
it's not this anymore. Ha ha ha.
They own one more.
BKNG. So this is Priceline. BKNG. Let's see. So BKNG currently $110 billion in market capitalization. Very impressive here. Norwalk, Connecticut. Who knew? Who knew? The fact that you and I went to Connecticut that one time and you had never been to Connecticut before, something like that, is ridiculous, Spencer.
I've been to Connecticut. I've just never really because I've been to Connecticut for like one day in my life, or now 2 days. 2 days of my life.
So here, what are we looking at? So we're looking at these extensions, you know, something like that. That's about right. That's about right. So when you extend out to that major collapse, you know, you're looking at some key support levels right around 1020, right? The market proved that. You got some key levels around 1650. And then more recently, you're looking at that 2266-ish right there, right? Market really respects these Fibonacci extension levels in case you hadn't noticed. So that's the big one right there. You know, these former highs, you know, which are basically the 2021 highs, those are the big ones, which is the case in a lot of the market. Remember, technology is now up against these former highs and failing. Semiconductors as well. Industrials, home construction, right? The S&P and the NASDAQ are still stuck below their late 21 highs. Price line here, booking is already well above that, which is certainly evidence of relative strength for sure. And this coming from consumer discretionaries, which is also interesting, the relative strength that you're seeing out of that consumer discretionary, which has been the case since the market bottomed last summer. So I suppose shouldn't be all that surprising, I suppose.
All right.
But even stronger. So although not surprising, even stronger than you'd think. Even stronger than you'd think. So that 4,300 level is the next target there. If you want to, should we zoom in a little bit shorter term here?
Yeah, why not?
Oops, keep doing that. Keep putting that PCLN. So here's short term, right? Here's this consolidation. You can extend from here. So this is BKNG, shorter term. You can just extend from down here, right? So that's your big level right there. You know, your 2940 or so.
Mm-hmm.
Right there. So long against that, I don't hate it with a target up above 4,000. I don't hate that at all. Below 2,900, you kind of got to leave it alone. Then it gets messy. That's how I see it.
All right, this one is from Dan. What about TNET, TNET? TriNet is the company. It is a professional services payroll processing company of that sort. Dan says TNET looks good. Bought in a pullback to the 110 area?
You know TNET? You know TNET.
Not really.
Really? Oh, I've actually used it.
I had to look that up just now. I don't know.
I've used it. Are you sure?
I thought this was a TNET healthcare at first. That's what I thought this was. I didn't.
No, this is TriNet. This is like you know, it's kind of like all the payroll tax stuff. You know, all benefits for like startups and things like a lot of startups I know over the years have used this because it's like an all-encompassing, all-in-one. It gets you what you need.
It's like ADP, but for smaller companies.
Yeah, basically.
Yeah. Okay.
So it's a good service. I thought it was pretty cool as a user. But nevertheless, you know, this 126 is a pretty good level here. This is TNET. So this is a pretty good level. This technically is an industrial stock, just under $6 billion, but it's really should be considered software. Seems more software than anything else. That 126.5 is a big one. That's overhead supply. So it's kind of stuck in this range right now. Here we are sitting around 113. You know, so this, you know, it's kind of messy. I would keep a close eye shorter term here on these former highs here. Right.
All right. There you go. So wait, what level is that at?
Here.
110. 110 was the
right around that 110. Yeah, right around just below 110. You know, you start losing that, things get a little messy, you know, down towards 82 maybe. You know, I like them a little cleaner. You know, let it dance a little, see what happens. But ton of relative strength, making all-time highs. Can't argue with that.
All right. Wavy's asking about Live Nation here, LYV. I'm looking at this one in a while. I did not expect
what's the ticker?
LYV.
LYV.
Yeah. Did not expect this one to be holding up nearly as well as it has, even though it's down 50% from its all-time highs. I would have thought it'd be down more than that, frankly, but it's not.
Look at that long-term chart.
Yeah, I mean, looks good.
This is LYV, longer term, $18 billion in communications. And that's sort of your range right now. Right. So it's, you're kind of in that 62 to 99. You see how we're stuck underneath this right here? Right. You see how we failed there? A lot of, Netflix failed in a very similar way, just like that. So that's what I'd be looking at, this 63. We're right in the middle of this range. So if you're getting paid for it, maybe sell the 100 calls or something like that. Maybe, sell the 60s or something like that to the downside. If you're getting paid enough for it, seems like an opportunity to take advantage of some volatility, and sell the premiums in a messy market.
All right, let's move on to the YouTube chat. Kevin Hughes asking about Deere. Man, this thing got rejected so hard at 450. I know because I almost bought it. I almost bought it then. And then
I actually was long. I lost money in Deere.
Yeah.
I thought we were gonna get this. I thought we were gonna get a breakout.
Yeah, you almost talked me into it. I almost bought it.
Yeah, it didn't work. Hey, no. You win some, you lose some.
Yeah.
This is what it looks like to me, bigger picture. But clearly it's still in the process of consolidating, right? Got a little ahead of myself. We bought call options. That's the beauty of the call options, right? You can't lose more than what you invest, right? So you're buying out of the money calls. They didn't work. That's it. We're cool with it. That's what's good about a trade like that. But now here's another lesson. Earlier in my career, I would have said, you know what? I'm not going back. I had a bad experience. It didn't work, but the market doesn't care that JC and Sean lost money in John Deere calls earlier this year. Market doesn't care, right? So why should we? We're going to look forward, and nothing has changed. So we got the timing wrong. Okay, fine, move on. If we were to enter a trade in the future, it has nothing to do with what we did prior, right?
Yeah, that's true.
So that's how I see it. So this is John Deere. So that's how I see it. So, but for me, I'm gonna be patient. I think there's cleaner places to be. But the reason that this is so important, guys, the reason that I think that we want to keep a really close eye on this base is because of this, right? Take a good look at what this looks like, and then take a look at what this looks like, right? It's very, very similar. Very similar. Oh. CVOE breaking out of this base.
Yeah, but different business, different sector.
It's the same setup, though, is my point.
Yeah. Right.
Both cyclical in nature. Both very similar patterns. Yeah, I think they're very, very similar. Yeah, 100%.
All right, so if you had to own a financial, CBO looks good, obviously. What about Blackstone BX for Michael in the chat here? This one doesn't look as good as CBO, but it
few stocks do.
Doesn't look as bad. Doesn't look as bad as the XLF either. Right.
Yeah, here's a long-term look at Blackstone, and again, right in the middle of this range, right between 92 and 140, kind of right in the middle, kind of path of least resistance. I think remains higher, but within the context of sort of a messy environment. So, again, a top of 92, below 140. I think that this is going to be the case now within financials. Capital markets have really held up better than most, very impressively so. So at least it's within financials, but messy at best. Messy at best for now. Impressive relative, but how far does that get you?
Right, it's all relative. But again, if you had to, for whatever reason, own something in the financial sector, these two charts. You can do a lot worse than these two charts is probably the point. Michael asking, does the volume speak to you? Do you ever look at volume, JC, or not really?
I only look at volume to make sure that something is liquid enough to participate in. I don't look at volume in the equities market because it doesn't tell the full story, because you're not getting any of the information in the derivatives market. Like this isn't when Charlie Dow wrote his Dow theory tenets in the 1880s. About how volume, because then you could actually see the volume. It was a different game they were playing.
Okay, let's just do one more and then we'll hop. We got a light day today and we got a lot to get ready for Charge Summit. We'll do ARE. I don't know why Wavy is suggesting this one, but it's a REIT. So what more do you want? This thing is so bad that on my chart right now, on my trading view chart, I can't tell the difference between the I'm on a monthly chart right now. I can't tell the difference between the monthly candle that we're in and the volume bar. That's how low, that's how bad this thing looks. The volume bar and the monthly candle look identical to me. That's how far down on the chart it goes.
I mean, this is a chart that I've been watching because we were coming down and testing support or potential support. And it didn't hold, right? Because look, so here's former support. Here you go. And then what do you got here? You got a monster break. Right? So as long as we're below that, there's really nothing to talk about.
Yep.
Nothing at all. 110 or so. 110, 115. 115 is probably a good number. Below that, you can't touch it. Probably a good short. Maybe down towards 70. Below 115. Yeah.
Actually looks like XLRE anyway. Okay, fine. A couple more just came in. UEC.
Well, it's a big component, probably.
Yeah, it is. UEC, we talked about this one yesterday in the morning show. Uranium play. I don't know. I see uranium all day on Twitter now and Reddit. I see uranium stocks because chart go up. So everyone's excited about this about the space because
does that bother you? Is that a top? Is that sign of the top?
No, it doesn't bother me. It more so it's just an interesting thing. Not to give you too much credit, but it does seem like we talk about things on the morning show and then I see them mentioned later on. Like for example, the journal had an article this morning about the weight loss trade, right? Instead of the COVID vaccine trade, right? Novo Nordisk and all those guys versus Moderna and Pfizer. We talked about that like a month ago. We talked about that, right?
Right.
Yeah. So
someone's watching.
Yeah. Anyway, so uranium energy, this came up yesterday, and I don't know. Do you have a level?
Yeah, I mean, listen, the uranium space has been hot overall, but these things have made some big moves. So I would keep a close eye on these former highs, right around $6.5, $7, as we approach these levels.
Yep.
It's gonna be it's a little frothy up here as it's turned out over the last decade or so. So I mean, just to bet that we're gonna rip right through these former resistance levels like they're not there, that's a tough bet for me. I was long uranium right here. I remember getting slaughtered. This is when the friggin' tsunami hit Fukushima in Japan, and you got all these nuclear meltdowns. JC was long UEC, and CCJ and URA. I was nice diversified, and the U. I had them all. I was in, and I learned my lesson. You want to manage risk, no matter whether it's a tsunami or whatever's moving the market doesn't actually even matter. Manage risk, know the plan going in. And I like a breakout above those former highs. I think that'd be super bullish. I mean, think about it, how long it's taken for uranium stocks to get back to those highs from before Fukushima. We're still here. We're still not back at those levels. And we're 2023, that was 12 years ago. So fascinating. Almost 13 years ago. Wow. I remember, it feels like it was yesterday.
Okay, well, this is actually going to be the last one. ARLP, Alliance Resource Partners, MLP, I believe. Oil and gas. I think it's an MLP. I don't actually know. I'm assuming it is.
Certainly trades like an MLP.
Yeah,
so this is
ARLP.
It looks like other ones.
Looks like it. Yep. They're all the same to me.
This is a thermal coal stock, as a matter of fact.
Oh boy.
From Tulsa, Oklahoma, paying 13% yield. Holy shmikeys.
I saw a thing. Who said it? Brian Feraldi? Someone said this. I saw a high yield means that you used to be a good stock. That's what that means.
Well, not for these kinds of companies that
Sure,
specifically
yeah,
pay.
It's different for MLPs. Yeah.
Yeah, for
But
sure.
generally speaking,
This is what I'm seeing here. I'm seeing trouble right around this price, right?
hmm. Cap.
But you know, if you look at a total return chart, it's going to look different because it doesn't include the yield.
Oh yeah.
Should we throw it up real quick?
Sure, why not? Yeah, you're seeing 14, I'm seeing 13, same difference
in yield.
Yeah.
So here we're looking at ARLP. See the where can I get the performance? Here we go. Look at this bad boy. So we'll go all the way back.
2013. Let's see. Yeah. Certainly looks it well. Okay.
Looks a lot different. Looks a lot different when you look at it like that.
If you go back to 2000, sure, yeah.
Well, I'm just saying, like, let's put things in perspective. How much yield this thing has paid. So even if you look back at 10 years, you know, not bad, right? You know, so this is what it looks like on a total return basis, ARLP. And when you look at price only, it looks like this. But on a total return basis, it's making new all-time highs. You know, very, very impressive. So just when you're looking at these types of companies, you know, when we're doing technical analysis and understanding supply and demand, this is what we're looking at. We're looking at the price of the assets. But if you really want to understand the performance, which is two different things, then you want to use a total return chart. But as you can tell with this one, it looks very different, doesn't it?
Well, that's what MLPs will get you, right? That's the whole point. Pretty much. All right. Okay, that'll be it for CRL. Guys, we have Chart Summit coming up in exactly 3 hours from now. If you haven't registered, go do that. It's free. chartsummit.com. We will not be doing a morning show tomorrow. We'll be doing, I don't know if I mentioned that today, but we will be doing Chart Summit all day. So that's where you'll find us. We won't be doing any shows tomorrow. It's all Chart Summit all day long. So go to chartsummit.com, register now for free. And if you can't attend live, it's okay. It'll be recorded. The replay will be sent out. Ain't no thing, but do that. We'll see you guys there. Have a great rest of your day and go make some money.
Adios.